Hey everybody, Shane Severson here, Legacy Realty, and just coming to you to do this month's market update. We have our numbers out for October, so we are going to do our October market update, and I'm excited to go through this with you. I am sitting in my office. I am on my computer. That's why it looks a little different than normal. I do this every once in a while, so I can kind of do a screen share so you guys can see what I'm looking at, where I get the data, and just makes it a little more interactive, a little bit more education for you guys. And so I'm excited to do this. So let's jump in, and I will do my screen share here, and I will get to our numbers. So if we look at, I'm going to change a few of these things so it makes it a little more readable. The last 3 years, we can see average close price. So you guys see right here. So you guys can see, hopefully, our October numbers came out, and our average sales price is $664,127. $664,127. That is our average market update. That's our price for the month. We are up in October 13.8% over last October. If you look at last October on our graph here, we were at 583. So last year in October, we were at 583 for an average home. And currently we are now at 664. So well done for all of you who have listened, bought homes. Hopefully some of you have bought a second home, third home. I've been working with a lot of you on investment stuff in real estate, and well done, because you've done really well over the last couple of years on your house value. Couple things that I want to talk about, and then I'm going to kind of get to the punchline, talk about all the data and stuff before I show you a lot of the numbers and statistics. And I want to do that so it kind of all makes sense and comes together for you. So there has still been a lot of concern about the market, what exactly is taking place. You see that graph. I'm concerned still that the market's going to crash. Most of you probably realize by now that it's not going to crash, but there's always concern when investing or buying a home. Is it at the top? Is it going to start leveling down? And I say all the time it's not, but there's still concern. There's still questions around that. A lot of concerns on the market and the economy and just everything that's going on right now. So there's still lots of concern. So I want to jump in and talk about that. Here's kind of my spiel. I always say, if you are around me much, I don't have a crystal ball. I can't see the future. I'm not God. I don't know what's going to happen next year, the year after, in 5 years. I can't tell by my crystal ball exactly what's going to happen, but I can say that outside of a catastrophe, and what do I mean by a catastrophe? I mean the entire economy crashes because of what's going on or something like that, which, let me start by saying, if it does, if the market does crash, if the economy completely tanks completely, then we've got bigger issues than did my house go down by 1% or 5%. I think if the market completely crashes, we're all looking for new jobs. All of us are out of business. All your retirements, all your savings is probably gone or destroyed. And we got major issues. So outside of that kind of catastrophe, and I know many of you are saying, Shane, that's going a little extreme, and I would agree with you, but I would say outside of that kind of catastrophe, there is nothing stopping our market for at least the next 3, 5, or more years. I would project more years than 5, but there is nothing slowing our market down. It is going to continue to rise, continue to grow. And you would say, what information, why would you say that it's impossible for our market to crash? And I'm glad you asked. I got lots of notes here to keep us on track here, even though I ramble anyway. But anyway, we have 50,000 people moving in. Net gain. So we have people dying, we have people moving out, but we still have 50,000 people more coming into the state than leaving our state for whatever reason. We still have 50,000 moving in. Our economy is good, 50,000 people coming in, and we have no building. It's interesting. I was thinking about this. Back when I was in high school, they were building some of Highlands Ranch. My wife and I used to go to new builders all the time and look at all the new homes in Highlands Ranch. They were building Green Valley Ranch. They were building much of South Aurora. So all of the southern east, like air pockets, they were building Highlands Ranch, all those areas, and a ton of new building, ton of land to build on. Today, there is no new building. Now, if you would say, Shane, I see more building going on than I've ever seen, I would push back a little bit and say, yeah, we have little tiny pockets where there may be a little piece of land somewhere and you see a new builder go in and they're building 50 homes. I mean, we're not talking 50 homes, we're talking tens of thousands of homes that need to come on the market. So that doesn't quite count. Those are sold out in probably days or weeks. It's kind of interesting. I went showing homes and we went looking at new builders. And I think we went to 6 new builders with a very good friend of mine that's looking to buy another new home. And when we'd walk into the builders, we would ask them, what do you have available now? And the sales reps would actually laugh at us, saying, we have one house that somebody just backed out of, but get in line. We are out a year. And so we went out, looked at 6 builders all out east where there is land. If you're anywhere near the mountains or south in Littleton or Arvada-ish, anywhere in those corridors, there is no land. There is no way to build homes. So if you go out east, even the builders there, we went to 6 thinking we'd find something, and we basically got laughed at, said, get in line, you got to wait a year before there's even a new home that we can get you in. So that kind of shows you there are no new homes. There is no new building, and people are flooding into town. Where do we put them? Well, they're either renting or they're gonna try to buy, which that's why we have hundreds of buyers for 1, 2, 3 homes, because we don't have enough homes. What's gonna change this market? A couple things. Rise in interest rates can change that, less people buying. But if you look at the projections of interest rates, yes, they're going to rise slightly. But if you look at projections of interest rates over the next couple of years, they're still projecting interest rates to stay really low. One side note really quick, and I know there's a lot of data, a lot of information, and a lot of explanation, and I will get back to our graphs and everything here in a second for a market update. Like I said, I'm giving you all the talk first, and then we'll get back into the data so you can see what I'm talking about. But one of the things that has been taking place over the last quite a few years that we've never seen before is the government is pushing rates down on purpose. And in a seminar I was in with a lot of big investors in the area, they asked, do we ever see that the government would allow interest rates to rise like they used to be in the 80s and all of that? And the answer was no. They are pushing those down, never letting them come up again like they were, for the purpose of controlling the market so it doesn't collapse on us. And so I don't know that they can ever allow the interest rates to rise into the 8s, 9s again. We'll probably never see rates like that, maybe ever. But anyway, so we'd have to see interest rates really rise, which, as I just said, I don't think they will. Another thing that I see that is kind of a trend, you see it in a lot of the bigger cities around the nation are ADUs. If you don't know what an ADU is, an additional dwelling unit. So you can have a house. Let's say you have a 2-3 car garage detached in your backyard. A lot of cities are opening where you can blow the top off of that garage and go up and build an apartment around it. You could rent that unit. You could, do a lot of those things, so we can put people in there. And so that's something that could happen. The other thing that I've seen happen in some of these areas is what happened in Sloan's Lake. Actually had a friend, and that developer, if you see right next to Sloan's Lake, they bought up all those that little block area there and basically went up, I don't know if it's 12, 15 stories high, selling those things for like $2 million for the top units. But again, you buy up 30 homes and now you got hundreds and hundreds of units that they can build up. So I think we'll start to see some of that in some of these cities and stuff. But again, you're talking years and years to buy up neighborhoods and go up like that. So we're talking years before any kind of supply and demand can settle out. Now, I know there's still a lot of questions, a lot of concerns. Shane, I hear you. I hear that, we can't get the supply and demand out of whack, but are we sure those numbers really correlate? And that's really what I want to do. I want to talk to you about and show you the graphs of why that is the case. So let's jump back in to our graph here. And what I want to basically show you is, again, average price 664, 127. I want to actually take this. Let's go out to the max. And if you look at this, you can see this graph has been completely on an increase. The max my data in MLS will even look at, and we have other graphs that we can chart, but in MLS, the max, you can see it's set to max, is in 2009. So that's all the way back in 2009. It's been on a steady increase. Why is that? One of the reasons is, well, the reason is because of supply and demand. So let's look at our month supply. Our month supply, we talk about this a lot. It comes from a graph I'll show you here in a second. We are at 1 month supply, meaning if we added no new homes, how long would it take us to buy out the inventory with the current amount of homes we have? And we need to get up a lot higher than 1 in order for the market to change at all. 1 year ago, if I go back to, if I can find it here, October, we were still at 1.5. So you would say, man, the market was crazy back in September, October. We were at 1.5 months supply of homes. We're currently lower than that at 1. So you can see it's not getting better. We're at a negative 33.3% decrease since last year. So it's not getting better. It's actually getting worse. So the market is actually getting harder for buyers, driving prices even more. So you can see this trend of the month supply actually dropping, which is what's forcing the prices up. So hopefully you can see that kind of an opposite effect on our graph. Now, what I want you to really look at here is our month supply. Look at the month supply back in 2010 and 2011. We were at 8.5 months supply. That's how many homes we have, is 8.5 months supply. Now, what does that do to our market? And that's where I want to jump in here. And if I can show this other graph, hopefully this is all coming together for us. This is a graph that's put together here, month of inventory. We can see, if you look at this graph here, you can see what the month supply does to the market. So in a seller's market, sellers are controlling the market. Prices are skyrocketing up. Sellers can basically sell their house for what they want, ask what they want. That's the market we've been in for, 10, 15 years. and people think it's eventually going to have to end. And I'm saying it's not ending anytime soon. So anything under 4 months supply, and we're in a seller's market where the sellers are controlling, market is climbing as far as values, and it's getting harder and harder for buyers. You look at this little pocket, 4 months to 6 months supply, we are in a pretty balanced market, meaning buyers aren't necessarily in control, sellers aren't in control, prices are pretty level. They may increase a little bit or drop a little bit, but they're pretty steady, we'll call it. And then in a buyer's market, prices are actually dropping. So to get our market to drop and prices to drop and make it easier for buyers, a lot of people are still thinking prices have to eventually dip. Not if you got 10 people fighting for one home. Prices will never dip as long as people still keep buying. That is supply and demand. Once we get over 6, we are in what we consider a buyer's market. So here's what I want you to see. In Denver, I know this is mind-blowing and hard for just an average person not in the real estate business to see, but and understand. But what I want you to see is look at 2010 and 2011. Remember how many homes we had? We had 20-some thousand homes. I'll go back to that. But do you see what that did to our market? We didn't even really get into a buyer's market. So in 2008, 2009, all of the crash, we barely got in a buyer's market, and that drove the market down. Really, we have not seen prices drop, and we have not really seen a buyer's market in Denver. It's been in the 80s. So you look at back in the 80s when interest rates were 12% and all of that, that's the last time we really saw a buyer's market. So what I wanted you to really look at is this little peak right there. That is what many people are thinking, oh, the market's got to crash, it's going to drop. This little thing right here, it didn't even put a blip on our market. Prices didn't drop. I mean, they've been increasing, but that right there is what I want you to see, because if we come back to our data points here, you look, we are currently, I can show you, we have active listings. We currently have 5,567 listings. That's all of Metro Denver. Sounds like a lot until you realize how many people are fighting for that. 50,000 people that are moving into the state is how many people are fighting for that. We're negative 34.9% of active listings since last year. So 5,567 is not going to get it. That's not going to get it done. If you look back in that little tiny blip when we kind of got to a buyer's market, but it was more of a neutral market. This is what the graph looks like. And we had 22,500 homes on the market. So we need to go 4 to 5 times the amount of homes. Really, when the crash happened in 08 and 09, we had pushing 30,000 homes on the market. And the question is, if COVID can't do it, if a crash in our economy, we've been through, I think, 4 or 5 recessions, and Denver has only dropped really one time. And that wasn't because of the recession. It was because of the crash of the mortgage industry. If the crash of the mortgage industry is not really going to do it, if any other crash in our market's not going to do it, if COVID is not going to do it, what's going to do it? And that's the point. It's impossible. It cannot slow down until something major happens. Rise of interest rates, economy drops. We have massive amounts of hundreds and hundreds of thousands of homes being built for purchase. That will then start to tweak the market, and the market will start to drop. So with all of that information, I know that that was a lot of details, a lot of information, but with that, what really is going to change our market? And the answer is nothing. So with that being said, what should you, as a buyer, as an investor, what should you do? And my answer to you, that's the data. Buy, buy, buy. My big adage, my big slogan over the last year, it's going to be much, much more here soon, is going to be buy a house, build a home. Buy another, build a legacy. What should you do? You should buy a lot of homes. Can I tell you, if you buy a home, you're going to make 40 to 50,000 equity every single year. If you buy two, that's $100,000 a year you're making by sitting and doing nothing. So do you want to make, how much money do you want to make? You want to make 100,000 a year, own two homes. You want to make $1 million? Do the math. It's not that difficult to figure out. I hope that helps. If you have any questions, if you are one of those investors that really wants to take advantage of this market, don't wait any longer. I promise you, in the next year, probably next year, we'll hit average price in Denver of 700,000. So don't wait. Now's the time to act. We have a long, long road ahead of us of increase in price. So hope that helps. God bless. We will see you next month with the new numbers, but I don't expect any change. It's been this way since almost I've been in business. So anyway, God bless. We'll see you next time.